Welcome to the Deep Dive. Today, we're cutting through the noise to give you the essential insights from the London and St. Thomas real estate market using the very latest data you've asked us to analyze. Our mission is simple, a deep dive into the November 2025 numbers from L-Star. We're going to figure out what flat sales, record high inventory, and surprisingly stable prices actually mean for you. And all this analysis comes straight from the experts at Forest Hill Real Estate Distinction Branch in London, Ontario. If you're looking for that kind of local expertise, you can find them online at www.forestholdistinction.com. So here's the big question right out of the gate. We're seeing this weird tension in the data. Prices seem stable, which sounds good, but they're up against this massive decade-high inventory. What is the market trying to tell us?
That tension is exactly it. It's the whole story right now, and it's why you can't just look at one number, like the average price, and think you get it. So today we're looking at three things. Sales volume, that huge shift in inventory, and then how prices are changing from one neighborhood to the next. Let's unpack this.
All right, let's start with sales, the activity. Across the entire L-Star region, 492 homes were sold on MLS in November.
And that number, 492, it needs some context immediately.
Yeah.
If you just look at last year, it seems like a big drop.
Right. Compared to November 2024, sales were down 19.2%. That looks like a pretty significant cooling off.
It does. That's the headline that grabs your attention.
Yeah.
But if you pull back and look a little further, say 2 years back, the story kind of flips.
Okay. How so?
Well, that same number is actually up 15.5% compared to November of 2023.
So what you're saying is, while it's a dip from last year, the overall activity is actually falling into a more predictable pattern.
Exactly. The market isn't falling off a cliff. Sales activity is just settling down. It's steady, even with all the economic uncertainty out there.
Okay, so sales are stable. But that brings us to the part that isn't so stable. Inventory. This is where it gets really interesting for me. The market recorded 5.7 months of inventory in November.
That 5.7 figure is, I think, the most important number in this whole report. It's huge.
Can you break down what months of inventory actually means for someone listening? It can be a bit of an abstract concept.
Absolutely. So in simple terms, it's how long it would take to sell every single home currently listed for sale, assuming no new homes came on the market.
And sales continued at the current pace.
Right. And a balanced market, where neither buyers nor sellers really have the upper hand, is usually somewhere between 4 and 6 months.
So 5.7 is pushing the upper end of balance.
It's right on the edge of becoming a buyer's market. And here's the kicker. The 5.7 months is the highest level of inventory we've seen in November in the last 10 years.
A 10-year high. So if there are so many homes for sale, why aren't they all getting snapped up? Why are buyers holding back?
Well, from what we're seeing, it's really the economic climate. It's uncertainty. People who can afford to buy are just waiting on the sidelines. They're looking for a clear signal on interest rates or the economy before they jump in.
And their hesitation is what's causing this inventory to build up.
Precisely. And what's fascinating is what this means for you. If you're a buyer, this is a golden opportunity. You have choices. You have time to think.
And you can make offers with conditions again, right? Like financing or a home inspection.
Yes. Things that were almost impossible just a couple of years ago. You have leverage that buyers haven't had in a very, very long time.
But on the flip side, for sellers, this must be a completely different ballgame.
Oh, completely. You have to pivot your entire strategy. With this much competition, your home has to be perfect. That means perfect presentation, professional staging, and most importantly, sharp strategic pricing right from the start.
You can't just list high and hope for the best anymore.
No, if you price your home based on last year's numbers, it's just going to sit there. You have to be proactive.
Okay, so that's sales and inventory. Let's get to the bottom line, pricing. The overall L-Star-wide average price in November was $605,000.
And the really remarkable thing about that number is how stable it is. It's virtually unchanged from October, which was $606,000.
Wait a second. That doesn't quite add up. If we have a 10-year high in inventory, shouldn't prices be dropping more aggressively?
That's that friction we talked about at the start.
Okay.
It's a great question. What this stability suggests is that sellers are holding firm.
So the people who had to sell have already sold, and the ones left aren't willing to just give their homes away.
I think that's a big part of it. They're resisting that downward pressure from the high inventory. They'd rather wait or pull their listing than sell for less than they want.
But we can't ignore the bigger picture here. Even if it's stable month to month, that price is still down from a year ago.
Correct. You have to look at both. The average price is still down 5.6% compared to last November. So the market hasn't recovered, but it has, for now, stopped the bleeding on a monthly basis.
Now, that $605,000 figure is just an average for a huge area. LS Star covers a lot of different communities.
And the prices vary wildly. So we have to look at the regional data. But first, let's quickly touch on a term you'll see: HPI benchmark price.
Right, the MLS Home Price Index. Why is that important? How is it different from just the average price?
It's a critical distinction. The average price can be skewed easily. If a few multi-million-dollar homes sell one month, the average price shoots up. But it doesn't mean your home's value did.
Okay.
The HPI, on the other hand, tracks the value of a typical home in an area over time. It's adjusted for features like size and age, so it's a much more reliable, stable measure of true market value.
Got it. So with that in mind, let's look at the regional numbers, starting with the highest and lowest prices. Where are the outliers?
Well, at the very top end, you have Middlesex Center. The average price there was $968,000, almost $1 million.
Wow. And what was its HPI benchmark?
$767,000. And that big gap between the average and the HPI tells you that the homes that actually sold there in November were likely the really high-end, large rural properties.
They pulled the average way up. Okay, so where's the most affordable entry point into the market right now?
That would be London East. The average price there was $473,000 with an HPI benchmark of $432,000.
So still the most accessible area for anyone looking to get in under that $500,000 mark.
For sure.
And what about the core London areas, north and south?
London North is still at a premium. Average price of $652,000 with an HPI of $622,000. London South was a bit lower, an average of $626,000, and its benchmark was $561,000.
Okay, and let's quickly round out the picture with the surrounding towns.
Sure. Central Elgin was very consistent. The average price was $658,000, and its HPI was almost identical at $657,000. Very stable market there. St. Thomas came in lower at an average of $573,000 with an HPI of $525,000. And then there's Strathroy Caradoc, which was really interesting.
What happened there?
The average selling price was $596,000. But its HPI benchmark, the value of a typical home, was way higher at $728,000.
Whoa, that's a massive gap. The average price is $132,000 lower than the benchmark. What does that mean?
It suggests that while the underlying value of homes in Strathroy is high, the only properties that actually sold in November were likely smaller, older, or lower-priced homes, which dragged the monthly average way down.
So again, it proves you need to look at the HPI for the real story on value.
Absolutely. The main takeaway from all these regional numbers is that location is everything. You can't use the LS Star average to budget. There's almost a $500,000 swing between London East and Middlesex Center. You have to zoom in on your specific neighborhood.
That was a fantastic breakdown. Let's try to boil this down to two key takeaways for anyone listening. First, sales activity seems to have found a stable, consistent base.
Right. And second, while prices are down from last year, they've hit a floor month over month, showing that sellers are pushing back.
But all of this is happening in the shadow of that massive 10-year high in inventory.
Exactly. And we know the winter is always a quieter season anyway. Fewer people are out looking at houses.
Which brings us to the final thought we want to leave you with. If you're looking to buy in early 2026, you have to consider this: that high inventory is a pressure cooker. If interest rates stay put, could this be the thing that finally pushes prices down, even just slightly, through the first part of the new year?
That is the million-dollar question for buyers. You have the quiet winter season combined with the leverage from this decade-high inventory. Opportunity often comes when most people are waiting and watching. So do your research now, because sellers might be more willing to negotiate in the next few months than they have been in a very long time.
Excellent advice to end on. Thank you for joining us for this deep dive. And remember, a good local realtor is your best resource to navigate these very specific market conditions. We'll catch you on the next deep dive.